Hey everybody, it's Eddie J on Crypto. Hope you're having a great day. So last week was eventful to say the least. Nuts. Okay. First, you had Fed Chairman Powell come out and say, "Hey, look, things are not looking as great as we thought they would. Here's what we've got going on." Blah blah blah. That rocked the markets a bit. You had conflicting numbers and conflicting inflation numbers come out that rocked the market a bit. You saw Bitcoin go down all the way into the 19,000s. It's now back up to 21,200 thereabouts. You saw Polygon go all the way down to 95 cents. And now it's back up to like 112 right about now. These were all things that we could have been paying attention to make money fairly quickly, right? Do the math, 95 cents to get you, even what's that, 15% up? That's a 15% up rate within a couple of days. Okay. Are we at the 151 that it had been, a couple of weeks ago? No. But there was 50% right there I'm not 50, 15% that you could have made right there. Again, you have to do your own research so you can get the pulse of everything that's going on. Why did Polygon absorb some of that negative play? Well, it's because of Starbucks. Okay, that's why they were able to do that. But that's not the news. The news is Silicon Valley Bank going belly up. Okay, if they do not get backing right now, basically have a bank that has cash on hand, a JP Morgan, Bank of America, probably not Bank of America, a Citi, any one of these big banks have cash on hand where they can absorb, the current standings of Silicon Valley Bank, be able to pay things out without a problem, with ease, because they have to have the money. They have to have more money on hand than regional banks. We'll get into the regional bank piece in a minute. Now, because of that, the FDIC could say, we'll guarantee everything and you'll be good. And then there's still the holdings. You know why? Silicon Valley Bank did not go down because they didn't have the assets. They went down because they didn't have enough liquid assets. Okay? I said yesterday in a 1 minute, crypto minute, that the rules had been changed for regional banks. So instead of the $50 billion threshold, they were going to be held to a $250 billion threshold. When the CEO of Silicon Valley Bank started, pandering for that, Trump I think he started, lobbying for that in 2015. Trump finally gave it to him in 2018. And that's what helped to create this. There were a number of factors that went into creating this, right? It's the printing of money. It's the tax write-offs that were given to the rich. It created the perfect storm, and here you are, because now there's a run on the bank. Because why? Not the only reason, but one of the reasons why is because interest rates had to be bumped up fairly quickly, and Silicon Valley Bank never made the adjustment. It's called mark to market. Now, because they didn't make the adjustment, they got caught with their pants down, not having enough liquidity. So Peter Thiel, no, I don't like that guy, billionaire, but I still don't like that guy just because of how he does business, was able to get his money out, started telling all his holdings to get their money out. And that created the very situation that nobody wanted. That created the run on the bank. Okay? Now that there's a run on the bank, there's a liquidity problem. There's not an asset problem. There's a liquidity problem. Banks that have over $250 billion in assets under management must have a certain percentage of that money in some kind of liquid format, meaning they can get to cash fast. That's what they have to do, which is why all the traditional banks are sitting back going, yeah, whatever, sipping their tea. In this case, that's not what happened with Silicon Valley Bank, so they're belly up, okay? So we have to see if they're going to get rescued. In the meantime, companies like Andreessen Horowitz had money over there, big money. Circle had big money over there, okay? So out of their $40 billion, they had a big percentage. It's upwards of $3 billion that they had over there. Guess what? You're only guaranteed up to $250,000, and then you have to wait to see if any of the assets get sold off so that you can get your money back. That's going to be some time. So Circle is hurting. You want to know how they're hurting? I told you yesterday. Well, the USDC, their stable coin, depegged from the dollar. They're having a hard time even maintaining 97 cents. Last time I checked, it was 96 point something cents. That's a big problem. It had dipped all the way down to 85 cents. So imagine, people are cringing. People holding USDC are cringing right now because they're not worth anything. I'm just sitting back and I'm saying to myself, so there are pluses and minuses to fiat-backed stablecoin as well as algorithmic stablecoins. Again, do your own research and do what you have to do to keep yourself safe. All right. That's what I teach my kids. This is why I do these videos. These videos are really to teach my kids. This is what's going on, to share the research that they've done, the research I'm doing, all that good stuff, so we can pool everything together to make the family grow. That's what this is all about. So when I look at everything that's going on with with Silicon Valley Bank, I'm looking at major problems, okay? The first major problem is they do business with huge companies all over the place. We're talking companies like Circle, Tableau, Andreessen Horowitz, DocuSign. They do business with a lot of big companies. Now, if you look at the problem with Etsy is having a hard time paying their sellers because they had a lot of money tied up over at Silicon Valley Bank. That means that there's risk that those business owners did not necessarily know at the forefront of their minds existed. The risk is that you have another company inserting themselves into the transaction process. So when you own a business, the customer pays for something using a credit card. It goes to your credit card processor, to their bank, now over to your bank, which now you have your money. Well, when you introduce a company like an Etsy or Shopify, in a lot of those cases, you're using their information, bypassing your normal route, going through their route, then it lands at them, then they pay you. That's when it comes back into your route, right? When they finally pay your bank. Well, at that last point, Etsy is having a hard time paying their sellers. It's at that point. So now there's a problem. That risk always existed. But everybody clicks through when they're setting everything up. They just click through. I'm going to set up my store real fast. It's great. It's awesome. Until something like this happens, and now you can see what the problem is. Now everybody's scrambling. Those people on Etsy have a major problem. The major problem is I'm selling products on Etsy. I can't sell anymore because I don't know when I'm going to get paid. So now I've got to rely on my other sources to actually make up for that money. Now what do I do? Because I'm probably mostly marketed on Etsy, or I'm pointing everybody toward Etsy. Give us a call at Rebel Reach. We've got a platform. It's direct. We do not insert ourselves into your transactional problem. We let you handle your transaction, and we also have crypto, which means that it's a point-to-point transaction. Customer pays you, you get paid fully, and then you can ship out or fulfill the services or products that's necessary. That's the big difference. So if you're on Etsy and you're looking for an alternative, drop me a note. We might be able to help you. And we're not some small platform built on a small platform. We're actually a pretty nice sized platform, and we're built on Microsoft Azure, which means that we can scale and grow to whatever size we want. We host websites like social media platforms. We do streaming from our platform, all of that good stuff. So we're more than strong enough to handle it. So that's my offer to people that are on Etsy or Shopify or any other hosting platform where they believe they could be having a problem. We're here to help you get back in business, and we can do it on the cheap because I own the joint, so I can make those kinds of deals. So drop me a note if you need to. Now, looking forward this week, I'm looking for an answer from the government on what could possibly happen with SVB, right? Because the tentacles reach so far into tech, I'm also expecting a lot of technology companies, and I hate to say it, I'm expecting a lot of technology companies to fall off because they're not going to be able to make payroll. They're not going to be able to get that money back, and those are operational funds. So it could be a major, major, major problem. And we're just going to have to see what that hit is going to be. There are lists floating around right now about what companies are actually involved and what companies are not involved. We won't know for sure until I put out official statements. So official statements did come out from Etsy, came out from Shopify. I'm still doing research on other companies, but it's a big hit. So, looking at that, I'm hoping that we can take less of a hit. There will be a major shakeup of startups that are out there right now, and I feel horrible about it, right? Because a lot of these startups, a lot of these businesses were actually doing things right. I want you to think about that. It wasn't like they were out there screwing around in a lot of cases. They were actually out there doing everything right. Put your money over here. It's safe. They've been around for 40 years. You'll be fine, blah, blah, blah. Nobody thinks about it, right? Until something like this, and you realize, wow, I have risk exposure that I was not necessarily forward aware about or didn't pay attention to. So it makes a difference with who you're doing business with and how you're doing that business. If you're making that much money on Etsy, maybe you should have graduated to your own website to begin with, and that would have reduced your risk and increased your revenue stream. It's sort of like the t-shirt business. I want you to take a step back and look at this. A t-shirt business, first I leverage a drop ship t-shirt manufacturer, right? I come up with my designs, I do what I got to do. They drop ship the product. I don't make as much money, but I can make good money. Then after a while, I start making enough money. Then I start taking stock of my own t-shirts, right? And now I'm making more money on it because I'm able to purchase those t-shirts, right? At a higher discount. So now instead of making a percentage of what I'm making, I'm only paying a percentage of what I'm making, right? So that's great. But what's the next step after that? If you look at Earn Your Leisure, they were able to basically become their own production company and produce their own t-shirts. That's what's up. And I don't mean just t-shirts, but that would be the graduation. It's in that space, right? It's the same thing here. Your first step, your first foray is to create an easy website with Wix or Shopify or, Rebel Reach even, or with whomever. Usually with one of those guys, right? Because they're giving you the whole answer. We'll handle credit card processing for you. We'll help you with marketing. We'll do this. We'll do that. Then you realize, well, I've got to put more in if I want to get more out. So now you're doing more marketing on your own. If you've got an Etsy site, you're marketing on TikTok, you're marketing on, on Instagram or Facebook or Pinterest or wherever it is that you're marketing. You're doing all these things. That's when you should be saying, you know what? I should get my own website. I can still do business on Etsy, but I should start pushing people to my own website because I will make more money by cutting out that middleman. That middleman, you know how it works. You're paying your credit card bill, and as a vendor, you're paying Etsy a portion of your money. So now I can graduate my website, graduate my business. But that's the risk that you're hit with. I can manage my business. I can manage every aspect of my business. That does take work. But as you're moving up in how much money you're making on one of those other websites, that's how it works. I don't care if you have your own domain name and you say, oh, I have my own website, I have my own domain name. It's still under their umbrella. You're still utilizing them as yet another middleman in the process. You want to control as much of the process as humanly possible because that's what brings you the revenue. Period. End of report. That's how that works. Okay? Now, if you introduce crypto into the space, when you look at credit cards, that credit card transaction isn't done for 90 days. It's either 90 or 120 days. That money can be clawed back for any reason. Product failure, any kind of dispute that the customer wants to bring, right or wrong. The money that they give you, in a couple of days, that's not actually fully your money yet. Won't be for a rolling 90 to 120 days. I think it's 90, but it could be 120. So now you sit there and you're like, damn. But with crypto, that transaction is basically immediate. Compared to that transaction, this is immediate. It can be anywhere from seconds to minutes to an hour, and that's it. That transaction is done. You have your funds before you're shipping it. Somebody makes a purchase in the morning. By your mid-morning coffee, you've already gotten paid. You can ship that out. Totally happy that you've received all of your money, and now your customer is going to receive their goods. Done. Nobody's clawing back anything. If they want a refund, they go through the refund process and you send them the refund. Not the credit card company snatches the money back from you and then lets you manage the dispute and then whether or not you're done managing the dispute. That's what businesses have to go through. That's what people on the other side have to go through, your customers. Point-to-point transaction is the fastest way. Next fastest way is credit cards. Alleviates some of the risk. You pay for that, all that other good stuff. But if you're using a company that's handing you those financial services, you've now inserted another party into that transaction, and that extends the transaction process and costs you money, part of your revenue. So I want you to stop and think about that, because they're going to get their money no matter what. Whether you pull a profit or not, they're going to get their money. The credit card company gets their money. That transaction company gets their money. Then you get what's left. Literally, that's how the math works, because you get paid by them. Not you collect your money and then pay a fee. For us, you make your money, you pay us a flat fee based on your transaction tier. You might stay in the first transaction tier and be able to make a lot of money, but you're paying that flat fee for that transaction tier. We don't take a piece of your business, any of that. We're here to help companies. And we think we can help companies a lot because we've made technology cheaper. We've leveraged that technology to make it cheaper. That's honestly what we did. So now we're going to be marketing to that, because this exposes, if you're smart, you've now realized, holy smokes, this exposes that it's not a hidden risk. I don't want you to take it wrong. It's not a hidden risk. It's most likely, if you read the fine print, it's there. It's right there. Just like when you put money in a bank, they tell you only the FDIC, we're FDIC insured. Exactly. If you have the right kind of bank account, I want you to stop and think about that. Hear that. If you have the right bank account and you're only insured up to $250,000. The biggest problem that rich people have, or wealthy people have, is the management of their money. Everybody wonders about why they have such a problem. This is why. $250,000 is the max, insurance that there is. So they're buying assets. Learn the business of assets. It's a very big deal. It's a very big lesson for you to learn. Purchase an asset. So instead of having $1 million held in a bank, and you have a $750 million risk exposure, you go buy $1 million building. It's probably going to appreciate. You'll charge rent. You'll make money from that. You've now got an asset. Stop and think about that. It's the lesson of assets. There are a couple of great books out there that can teach you about that. It's Rich Man, Poor Man by Robert Kiyosaki. Read the Bitcoin white paper. I would tell you to do that so that you can understand. It gives you a real clear lesson on what the credit card transaction is. This is the Bitcoin white paper. It tells you what the credit card transaction is and what the Bitcoin transaction is. No more fraud, because the person can't make the purchase unless they actually have the Bitcoin. Boom, done. No overdraft, none of that. None of that gets tied up. Nobody can claw back the money. All done. Credit card transactions, but really you want to learn the business of asset management and creating assets, purchasing assets, things that can make you money. This is how that works. Learn those lessons and you'll start to be able to more easily identify risks such as this. Again, your biggest problem when you become rich, when you become wealthy, is the management of your money. Where's all my money? It's strewn out between different banks. If you make over $1 million, if you make $1 million, I've got $250,000 in different banks. That's a realistic situation. I know people with that problem. Then you have other people that have, I've got some cash in different bank accounts, different banks, different entities, so I'm guaranteed to get my money back, or I'm at least more liquid than whatever. Then I have, properties that I own, and I don't really own them. A trust owns each LLC so that I can handle that business better. It's about control, not ownership. More lessons for you to learn. Please learn these lessons. And again, if you've got an Etsy website or you've got an e-commerce platform and you're worried about whether or not you've got issues, drop me a note. If you have friends, have them drop me a note and we'll be able to answer questions for you. Anyway, this is Eddie J on Crypto. That's my Sunday roundup. Hope you have a great, outstanding rest of your day. Have a good one. Bye-bye.